Hey, good morning, everybody. It's Brian. Hope you're doing well today. Getting started just a few minutes early. It's the 14th of July. Forgot what month it was. Here for just a quick morning update. We're going to run through what we're looking at this morning, things that are setting up, and talk about some key levels that we're watching over in the future side of things. Other things that might come up, I don't know. Sometimes my train of thought just goes and we hit some deeper thoughts as well. Who knows? So anyway, let's go ahead and jump into it. We're going to start with forex, and we're going to move over to the futures market. Then we'll finish on crypto, just looking at Bitcoin and Ethereum. We might add in one of the privacy tokens here pretty soon, simply because as I've mentioned a few times over the last couple of weeks, there seems to be a really big push taking the dollar to a kind of a digital currency where everything's cashless. You know, I say digital, not digital in the aspect of blockchain digital, although that may be coming. But I think as we move cashless, some people are going to see, kind of thinking forward 5-10 years from now, we'll see what that does to the ability to have to operate in certain constraints. And I feel like privacy tokens are really going to have their day as we get more and more and more to that. But that's a discussion again for like a whole. We could just do a whole thing just on crypto. If you guys want something like that, shoot me a private message and let me know. Maybe we'll just work in a day or so that we just talk about crypto and what's going on there and ways to profit and move within that niche. So anyway, starting things off, let's pop over here before we even look at forex. Just checking out what's happening in the news today. We don't have any real high impact news that would keep us out. No specific announcement that affects the U.S. economy specifically. I mean, we do have CPI and core CPI coming up at 7:30, 8:30 Eastern time, so in about half an hour. They're medium impact and could be drivers for the overall market, especially when we consider that we've got earnings today. This is earnings week, and this earnings, especially on our bank earnings, Morgan, Wells Fargo, so Chase, Wells Fargo, Citigroup, Delta, some of the bigger First Republic, some of these bigger companies, watching earnings could be could be impactful to the market overall, especially as we kind of lump them as more and more come out and we get a bigger picture of what's actually happening out there. That could be it. You saw a big pullback yesterday in the S&P, well, really across the board in indexes in the stock market. So I don't know, was that a long squeeze or is something lining up ahead of earnings? Who knows? Doesn't really matter because at the end of the day, like we always talk about, everyone wants to know why that happened yesterday. Why did we have this big sell-off? Why does it matter? It doesn't. It's fun to look at it, and it's fun and interesting to read about it and hear, different bits of conjecture about what people think about what drove this or why that happened or what's going to happen next. But at the end of the day, none of it matters. What matters is something quantifiable that we use to manage our trades. I won't go down that rabbit hole today. So let's start over here. So ultimately, what we're saying around news is we do have a medium impact report that's coming out that could impact over us. Kind of the CPI is a kind of a leading index about what's happening with cost of goods and services, right? So that'll be interesting to see how that looks, over the past month over month, and how it compares to the expectation of what was going to come out. The bigger thing that could impact us on the index side in the futures market is these earnings and how those are viewed from a longer term stance and what's happening and how that could potentially be driving future markets. So this is all week. We have a lot of reports coming out, and could certainly be again, market impactful for us. But we'll wait and see. There's no point in trying to front run any of that. We just need to wait and see what actually occurs and how the market reacts to what's being reported. Right now, coming into the U.S. session, the U.S. Foreign exchange session begins in 1 minute, begins at 8 a.m. U.S. Eastern Time, and that's just about to start. As we're watching to see what's happening here on the charts, what are we looking for? Well, we're looking for divergence. We're looking for currencies that are actually moving and diverging from one another. Leading up to this point, the most active currency has been the euro here. The euro has been bought. It's been a rising currency over the past few hours. So, coming into the new session, the euro is our strongest currency and the pound is our weakest currency. So we'd be looking for things that we could potentially pair together around those. The euro versus the yen certainly is a potential currency pairing. We look at what's happened over here. It's moved 75 pips for the day. Its average is kind of all over the place, 90 on a 5-day range to 105 on a 30-day average. So it's kind of all over the place. Could it move that extra 20 pips it needs to go, to get into profit? Yeah, potentially. I think it'd be a little tight, but it could potentially be there. Pound CAD, is interesting. However, the CAD is below the midpoint. The CAD isn't really showing us too much right now. But if we look at the pound CAD, that one's only moved 60 pips, and it's got a much wider range. It's typically, into that 90 to 100, maybe even a little bit over 100 pip range. This one has more, quote, gas in the tank. However, they're both below the midpoint. They're not really diverging. They're anytime we see a currency pairing that's kind of sitting like that, sitting without that breakout, what am I trying to say? My brain's all over the place. Just kind of sitting in a tight range like that, you would expect to see them on the currency strength meter here, just kind of moving together with one another. However, with that said, as the market session gets going, if we see this Canadian kind of move through the midpoint and start pushing stronger, that could be an interesting trade for us. The other interesting potential trade for us would be the CAD versus the yen. If it breaks through, and it would have to break through the midpoint here and start pushing higher, but if the CAD does become a stronger currency and begins to diverge to the stronger side, and the yen continues to weaken, that could certainly be interesting for us. And I like it because it's only moved 30 pips for the day, and it's typically in that higher range as well, up to that 60, 70 pip range. So, there's certainly opportunity for it if it does break out. So, just looking at that, certainly could be some opportunity for us there. As far as something that's just happening immediately, the CAD versus the euro, or the euro CAD, would probably be that tradable opportunity where we could just simply park a buy at the top of that breakout box and see if it continues to move on. If we get this good burst of momentum where the CAD does move weaker and that euro continues to see strength this morning, that would take us to the top of that box, and it would certainly give us that opportunity to move a little bit more. So that's we could look for that. And then also we talked about the euro versus the yen, which the yen might be the better of those pairings because it is a weaker currency. It's had a better movement to the weaker side than the euro CAD has. So the CAD's kind of that. It's just hanging right here at the midpoint. It's in that zone where we don't know what it's going to do. It could burst higher, it could burst lower. The yen has been pushing down over the last few hours, so we're seeing a better movement of divergence between the euro and the yen than we are for anything else. And that's really, I think, if we just had to find one, it's typical range is a little bit wider, that 90 to 100 pips. So could it get to that 20 pips beyond where we are right now? Yeah, I think it's got a good potential of doing that. So as far as looking at a trade where we have divergence at the very beginning of the session, we could go ahead and set that up and throw a buy order on there. And if it moves, great. If it doesn't, in the next hour or so, if it doesn't move through the top of that range and get some momentum behind it, then that trade never fills, and we just move on, and we don't, no harm, no foul. As far as watching things intraday, what we're watching for on an intraday basis for trading is just looking for those currencies that are diverging from another, where we get that nice momentum burst, where we have a strong currency that suddenly moves stronger very steeply and rapidly, and that weak currency moves weaker very steeply and rapidly. And then take into consideration what the average range has been, and determine based on that the current day's range versus the average range, and see if there's you may have to manage that trade very aggressively. If you're near the top of a range, it might be more of a scalping situation at that point, to see if you can lock in some profit, lock in some of that, whatever that momentum burst that got you there. Try to lock it in, and then see if that trade moves on from there. But that's what we're watching. So let's move over here to the futures market. Which one? Yeah, my bad. Over here. Let's over here to the futures market. What's happening over here? Well, S&P, all of these are in a mixed situation right now, by the way. They're all mixed. So what we've got on this, starting with the S&P, the bias, the 4-hour bias is long. So we're still in a long bias. 30-minute bias is short because of this sell-off at the end of the day yesterday. For just a couple of minutes, we made new highs for 2020. So for a couple of minutes here, we cracked out and set new highs for the year, and then immediately sold off, which is right at, if we look at how price reacted around 32.18, which is the price we were talking about yesterday as a target point. If we were looking at trades, we said if we were to take a long trade, we'd be looking for a target of 32.18, mainly because that was the top. And it hit that top yesterday and just repelled right off of it. So today, we're not looking, yesterday we were looking for long trading opportunities. Today, we're in a mixed bias. So our 30-minute bias is mixed from our 4-hour bias. What does that tell us? It tells us, hey, if we're trading directionally, if we're trading based on the trend, it's mixed. We don't know. The market's mixed up. It says, hey, sit on your hands. Wait for me to find a direction again. And that's what we need to do. So today, we sit on our hands. Now, if this breaks back above and 30-minute, moves to a long bias again, then we could certainly start looking at these key levels, 3170, 3185, 3187 up here as potential opportunities for new trades. But this would have to flip back over to be a long bias, so that our 30-minute and our 4-hour were in agreement. That would then allow us to move on, trading with that trend and taking those long trades as they potentially come to us. For right now, this is one of those days where you stay out, you stay away until conditions are met that provide you the opportunity to trade. That's a big deal. It's a really big deal. What was it? Was it Kenny Rogers? Know when to hold them, know when to fold them. Knowing when not to trade is just as crucial to your trading success as money management or anything else. There are times when we just simply need to stay out of the market. Sometimes around big news events, it's best to stay out of the market. If everything isn't meeting your trading criteria, stay out of the market. And I keep saying this, I know I keep repeating this, but for those that are maybe just watching this for the first or second time, you may not have heard me say this over and over and over for the last X number of years, because it's something I've been saying since, since I started talking to people about trading, 10 years ago, is we have to be selective. We have to have a plan, follow the plan. And new traders want to be in something all the time. Traders want to be, they identify, I'm a trader, I have to trade. I have to be pushing the button. And the act of pushing the button isn't the act of trading. It's a byproduct of it. But the act of trading is having a process and looking for the criteria that your process dictates so that you can make a trade. So the act of trading is actually the act of sitting and waiting for everything to come together that allows you to push the button. Pushing the button's a byproduct of it. Just like, when you're fishing, everyone wants to think of reeling in the fish, and that's really cool. But a lot of fishing is just out there with your line in the water, and you don't have that fun, that excitement of reeling in a fish. So same with trading. A lot of trading is just waiting for the setup to occur, not the excitement of having that trade on, and the rush of having a win going your favor, or the rush of having something going against you. It's a rush either way. It's there may be a different side of your brain that's working and processing that, creating fear, whatever it might be. But either way, you're getting an endorphin rush from it, and I think that's what drives people. It's kind of almost like a gambling mentality, versus a business mentality. When we're out there trade, as opposed to waiting for the setup. I'm going off on a tangent. Let me get back over to this. So long and short is 4-hour bias is long, 30-minute bias is short. We're going to stay away unless something happens where, if this happens to flip back over and, we push through and we see that we're trading long again on the 30-minute as well, and the 30-minute bias is in agreement with the 4-hour bias, then we can start looking for long trades. Until that happens, we're short. We're out. We're not doing anything. Crude, and I say we're not doing anything. We're talking about the process that we follow for the account challenge that we've been working on. In crude's kind of the same boat. 4-hour bias is still long. 30-minute bias is short. However, if that flipped over, we could start looking at longs again, or if it kept moving shorter and the 4-hour bias flipped over and that was short as well, then we could start looking for short trades. For right now, they're mixed. That tells us to stay away. Some people might want to look at breakouts. There's a lot of things that we could do in these markets where they start consolidating, and we don't know if it's going to continue to push higher or it's consolidating in a opportunity to push shorter from that point. There are other things that we could do when you get into these mixed biases like that that aren't strictly around trend trading. But the goal and the purpose of what I want to talk about when we're here for these is just to keep it super, super simple. The more simple we can keep it, the more apt a new person is to be able to pick it up, or even an experienced trader that's struggling to be able to pick it up and start following a very simple process, because the simple processes work because they're simple and we follow them, right? The more complex something is, the more moving parts come into it, and with more moving parts, there's more opportunity for failure, and the failure meaning it's not failure of the process, it's failure of us to follow the process. The more decision points that are in there, the more likely it becomes for us to deviate from one of those decision points and not allow them to all occur. So simple processes work because they're simple, and our little monkey brains can process that and follow those 1, 2, 3 kind of directions. So anyway, there you have it. Moving on over here to gold. Same thing, mixed bias. The 4-hour bias is long, 30-minute bias is short. Gold, sold off a little bit yesterday at the end of the day as the indexes sold off as well. However, gold is starting to crack back above 18. So if it stays above 1800 and this changes, flips back over on the 30-minute bias, we could continue looking for long opportunities on gold as well. So right now, there's nothing to do as far as trading with the trend. There's nothing to do there. We'll just hang out and wait. Let's see. Last thing to talk about would be over here. Would be just Ethereum and Bitcoin continue to be kind of consolidating there, and they're in a little bit of a flat point as well. However, the trend is long on Ethereum, so we continue to look for buying opportunities. You could look down here to this 240 area, 239.50, 240 area as a buying opportunity. It's a big level of support. we've seen it. It was resistance, resistance, resistance. It became support. It becomes resistance. I mean, price is just hanging right around here. So at some point, it's going to break out of this range, and it's either going to burst, strongly to the upside, or it's going to fall off of this. I mean, but we're seeing a really tight range setting up here. It's made a couple of runs longer, but I mean, if we really look between 142 and 137, it even goes 137 and 142. I mean, that's the range for this. The bias is long, so that would say, hey, let's look for long opportunities and trade. If we break out of 142, we could look for breaks long if it breaks out of that channel. You could also look for pullbacks, down here to this 240, 238 area, and see if it breaks. If it pulls back to there, we could look to go long. Some people might just want to trade breakouts altogether, though, and just say, hey, I don't know what direction it's going to go. I know the bias is long on this, but if the market falls apart, there's a potential for money flowing out of here to cover positions elsewhere. So this could fall as well. If that happens, then maybe I want to play both sides of it. There's nothing wrong with that, looking for a breakout long and a breakout to the short side. But the bias is long. If you're trading with the trend, you'd be only looking at long opportunities off of this. Same over here with Bitcoin. Bitcoin seems to be getting into a bit of a channel as well. The bias technically is still long on it, so we'd be looking for pullbacks down to this 30, down to this 9170 area. If it pulls back down to 9170, look to buy off of that. If it breaks above, really 9350, that'd be our breakout of this channel to see if you can continue longer from there. So that's those are some potential opportunities and ideas off of that. The biggest thing for any of this is to simply have a plan. Documents what's important to you in order to make a trade, in order to feel comfortable entering a trade. So what's important to you to make that decision, and wait for those things that are important to occur. Document it, write it down. X, Y, and Z has to happen. When X, Y, and Z happens, then I'm comfortable in taking a trade. At that point, once I'm in a trade, how much do I risk? Use good money management. Keep it in mind. Don't blow your whole account on one trade. Have maximum risk of 1 or 2%, 3% maybe at the most. A percentage of your account, and then look at your profit taking potential. How are you going to manage that trade intraday? Is it going to be with a trailing stop? Is it just a fixed stop loss and a fixed take profit point? A lot of ways to go from there, but you have to think through. And we've talked about pros and cons of those previously. But what meets your emotional state and your psyche, and roll from there. So anyway, that's all I wanted to talk about this morning. It's I think it might be a quiet day. So the big thing is we'll just see what the market does and where it takes us, and we'll go from there. Don't get too caught up and listen to the news and trying to front run what's going to happen, because no one knows. No one knows, no matter how credentialed they are and how many views they have on YouTube or TikTok, or how often they're on MSNBC and CNBC and all of those. They don't know which way it's going to go. Let your quantitative analysis do it for you. All right, have a great day. We'll talk to you later. Bye.